Hello guys, welcome to the Trading Parrot. Let's do a very quick update on Solana. We're going to look at the daily time frame, weekly, and liquidation levels and news. On Solana, I have two opposite setups. The first one is a bearish setup that has a technical target towards $100 thanks to these head and shoulders that you can see in here. The neckline is located at around $143. The most recent update that I published around 1 day ago, this one in here, already covers the possibility of spoiling the head and shoulder, invalidating it. As you can see in here, we managed to put a high at around $160 and come back to the neckline. Therefore, I wouldn't say that the head and shoulder is completely invalidated as of yet. There are two ways of invalidating at the very least a head and shoulder. One is to take the shoulder and making it too disproportionate relative to the left one. At this point, we can already say, well, let's give up with that idea. The second way is to break down and tempt all the shorts to enter, just go for the liquidity and bounce back up, completely tricking everybody. And based on that particular scenario is where I see potentially we could be seeing a bullish scenario. Why? Multiple reasons. Number one, we have this hill in here of liquidity. So if we really wanted to trick the market as market makers to make them believe that we're actually gonna go for the last one, we could just hit the green in here, get into around $130 and at the same time defend the descending channel. You can see that we have a parallel channel in yellow in here, and that perfectly coincides with just that liquidity. So even though it's a move to the downside, in my opinion, if after doing that we show a strong bounce around $130, that could be a great entry, which at least could give two conservative targets. The first target is the potential rejection from the neckline with further downside. That is already a move from $130 to $143. If we go beyond and we reclaim the neckline, we get into $150. That is strong resistance and it could still send us back down. But if we break out from here, then we are free to go, and that unleashes prices from $180 to $200 and liquidations on the top end. Now, of course, we have to admit that this is the technical target of the very scenario. I am tempted to think that we do not need to go there, but since there's so many personalities influencing the geopolitical tensions and it's impossible really to understand everything that's going on, this is not about betting which one is gonna play out, but more or less believing in one scenario and managing your risk, understanding at what point specifically the full scenario is broken. So this scenario of $120 is not just part of the technical target of the head and shoulders, is also part of the target. If we take the highs of 188, we go into this pivot of 140, and then we extend it to the area where we actually did the dead cat bounce. The extension of one perfectly matches with 121, and that's why we need to keep on both hands the bearish scenario and the bullish one. The bearish scenario is perfectly to trade it from the resistance. We have two chances, the actual dead cat bounce and the lower low, to enter on that short. At support, entering in the short is not the best idea, and the worst idea is to enter on the short on the breakdown in this area in here, because that is the perfect scenario to trap you if we are going to go for the liquidity hand bullish scenario into the top. Contrarian to what many people will tell you, longs are better in this support, but I actually think that longing from the liquidity slightly below gives me the best risk to reward, because if I enter long at 140 and I'm wrong, I have a good chance to DCA at 120 and get a great position to do a revenge rally, at least against that neckline that we were talking at $143. Let's quickly look at the weekly time frame, and as you can see, Solana has been performing really poorly. We got into highs of 86 on the weekly RSI, putting a low at 71, and then having a breakout internal in here, another one there. This one already kind of gave up and is kind of looking like if this was a dead cat bounce of this larger move. At the moment, the best that we can squeeze out of this move on the weekly that is bearish and is threatening to lose the support of 46 is to have a rally against the resistance at 57. I'm talking about a move something like this. At the moment that we get into 57, then we need to assess the situation if this is really gonna turn into a global breakout or if it's just gonna do one more ugly move to the downside. So I think the main question from the weekly for me is, where is that 57 in the price so I can keep track of it? Let's go into the price, and as you can see, I have placed on the right hand side 2 golden pockets, and let's see if you can figure out which one is which and for what purpose I have them there. You can see that they are upside down relative to each other. One is 05, 0618, the other one is 0618, 05. They're upside down. Why is that? Because one is measuring the golden pocket of the bounce up. Basically, this move from 92 managed to get into 188. That means that it couldn't reach beyond 05. It couldn't go inside the golden pocket, which could have been a bullish scenario. We all know that after a pullback, getting into the golden pocket is an area for another pullback back down, but also we know that achieving that golden pocket signals that this move is gaining strength. So far it couldn't, so it's weak. But let's say that if this move up, when it's coming back down, enter the golden pocket of that retracement down into 130 to 141, and it was able to bounce from there, we could see a second wave into finally getting into that golden pocket. That means getting closer or slightly above $200. And now going back to the RSI journey into that 57, let's wrap up everything. The thesis is, to be bullish, this move down should hold the 130, 140 and revert back up to create the third wave that can hit 191 resistance. At that point, we are millimeters away from the golden pocket from the whole retracement down. I hope I'm not confusing you, but main point is, let's get into $200. Let's prove that there is strength to the upside enough to later, after a pullback from here, to continue going way beyond $200. In terms of news, today we have 2 bullish news and 1 slightly bearish for Solana. Let's go through it and then we end. BanX Spot Sol ETF appears on DTCC roster. Polymarket puts approval odds at 91%. That's definitely something bullish. Solana Foundation joins Ondo Finance Global Markets Alliance alongside BitGet, BitGo, and 1inch. Absolutely, this is bullish too. And the third, let's see why this is slightly bearish. SEC pushes Franklin Templeton's Spot Sol ETF decision to late July. Extra review time cools near-term ETF euphoria and may delay large inflows. Historically, such postponements spark profit-taking. So let's keep an eye on how that profit-taking can actually affect both the pattern of the head and shoulder together with this descending channel. And if you're a bull, hopefully we defend the channel and we consider a long from around $133, pushing this back up from an area of reduced risk, increased reward, or if we want to short, we short from the top as well. Thanks for watching. I'll see you on the next one. Bye bye.